Good, how are you? Are you still there? Right. Can you hear me, guys?
We can hear you.
Okay, good. All right. If you would like, if you don't mind, it actually help me if you could turn on a video so I know I'm not talking to like just an empty screen. Just for my own. Yeah. Awesome. Now I feel much better. All right. So I have this recorded, and in case you need to watch it again, you should be able to see the link on Canvas, but I will send you a link after today's class. Okay. So what we're gonna do first, just go to the Canvas, and there is a module called Test 1 Preparation. I try to basically write down everything I know about the test. Okay. So here, it said the time of value of money table will be provided. Actually, it's not going to be provided for you. Okay. And therefore, if you need to use it, please just print out by yourself and bring it to the exam. Okay. The reason is in the past, the printing is not free, so I trying to do it for you. But now, library, you can just go to have this printed from library for free. So therefore, just please do it before the test. And if you are using financial calculator, you don't need a time value money table. That's perfectly fine. And if you don't know how to use time value money table, there is a video actually in the first module, and you should just watch it and to see how to do it, okay? And again, for this test, you can bring one page, one-sided, it's a handwritten note, okay? So you have to write it by yourself. You can write down whatever you want, And I also have a test review here. That's what we're going to go over some of the questions today. Okay, so you can just have it downloaded and save to your hard drive. We're going to test the 4 chapters. Here, I will try to distribute the question evenly among each chapter. Therefore, every chapter get a similar points. It's 75 minutes to finish the exam. If you have to reschedule, please let me know before the test, not after. Okay. So what will be tested? First one, long-term debt. We're not going to test the time value money review chapter. Instead, we're just going to test the time value money in different chapters. Okay, so the first one is long-term debt. For this question, you need to know at least one amortization table. I will ask you to create one amortization table, okay? You only need to do it once. And then for the rest of the question, normally I will give you the present value, so you don't need to calculate it by yourself. But there will be one question, 100% in the test to test can you do amortization table or not. And most likely I'm trying to see, can you tell it's a discount or premium, okay? And also, since you don't have Excel, and this amortization table is not going to be very long, tend to be like a 3 or 4 years maximum. Okay. Okay. So given today we only have 1 hour 15 minutes, and I will not be able to cover every single concept we have for these 4 chapters. So I did actually make some mini videos for specific example. So here for the long-term debt example, for the amortization, I have a small video here. If you don't know how to do it, and you can just watch it. Okay. The next chapter is stockholders' equity. And in this chapter, you will see a couple of multiple choice questions. So here, the format for this test will be multiple choice question and the essay question. So here, when I talk about essay question, I refer to the journal entries and the financial statement presentation. And here, you can see the total points is 150 points, but 90 out of 150 points are multiple choice questions. So some of the multiple choice questions are just concept to see can you understand or not, okay? And there will be a actual credit question. Actually, two actual credit question, but one of the actual credit question I'm gonna tell you right now is about the accounting cycle, okay? So here, if you know that will be great. If you don't know, at least write it down on your note, bring to the exam. But I'm just telling you now, one of the actual credit question will be the steps, the steps in the accounting cycle. You have to be able to write it in the correct order, okay? Any questions? Okay, all right. So long-term debt, next one, stockholders' equity. There's a couple of multiple choice questions will be coming from this chapter, especially about the concept, no calculations. But like say, for example, what's the difference between preferred stocks, common stocks? What's the difference between preferred stocks and treasury stocks? And all the journal entries, how it's going to impact the financial statement. For example, if you issue stocks, it's going to impact your return earnings. It's going to impact your paid in capital. So here, especially for stockholders' equity chapter, the concepts are important. Therefore, be able to really understand the difference for different type of securities here. And there will be one question, 100%. Go test to see, do you know the difference between proportional method versus the incremental method? If you forgot, I made another mini video here just to help you refresh, okay? And another question, 100% going to be tested will be treasury stocks, especially if you first buy it and then you sell at a different price. And what the journal entry is going to be. And the next one I wanted to pay attention here is for dividends. I only tested two types of dividends, which is the cash dividends and the property dividends. I'm not going to test you the stock split or stock dividends. Okay. All right. Next one, dilutive securities and earnings per share. And in class, we talk about like restricted stocks, restricted stock units, and stock options for this employee-related compensation. But for the test, we only need to test one type of security, which is employee options. So restricted stocks are not going to be tested, okay? And definitely the journal entry for convertible bond, preferred stocks, and how to calculate a simple and diluted earnings per share. And again, I made a mini video here, just basically go over the example we had in class, okay? So if you're kind of like fuzzy about this concept, please watch it. And the last is the investment chapter we just talked about this time, which is the journal entries for debt investment. And here you need to be able to first tell the difference among these three types, and second, do the journal entry. I'm going to emphasize this again one more time. When you do fair value adjustment, you must have this dash. Okay, so say is this available for sale, it's trading. And when you do unrealized gains and losses, you have to indicate is this goes to equity or income. Okay. Second point, which is a common place for a lot of students make a mistake, is you cannot just write as a debt or bond in your journal entry. You have to indicate is this a debt liability or is it debt investment. Okay, same thing with the stocks. You cannot just write as a stock if it's an investment. Okay, you have to write as a stock investment. You cannot just write a stock. Okay. Next one, the journal entries, the fair market value is going to be tested, and there will be one question about that. And you will see I will intentionally test you multiple years because I wanted to be able to do it to understand the fair value adjustment, how the change goes to the journal entry, not the ending balance. And last, there will be one question, only one question, can be multiple choice or can be in the essay question. One question about the equity method. You need to be able to do the journal entries related to the equity method. Again, if you forget, I had a small video here. So I'm trying to like break down the topic by topic, okay? Any questions? No, so if you have no question, then I'm going to actually go over the study notes with you one by one. I will tell you like where you should pay attention, where you can just skip it. Okay, so I'm going to first go to the first chapter, which is a long-term bond. Let me pull up. Okay, so everybody has this one open. Yes, thumbs up. Okay. So again, remember we only have 75 minutes, right? If you are me, you think about what's the best way to design a test. And you cannot be every single question calculations, and then nobody can finish it. And therefore, there will be some question. Clearly, it's going to be a very simple question. A lot of times about the concept. All right. So what are the key concepts in this chapter? First, how do you know it's a liability? It's a long-term liability or it's a short-term liability, right? So here, normally you think any debt you have to pay within 1 year, one operating cycle is a short-term liability if you have intention to pay. So these are very important. If you have a debt and you know even it's going to be due next year, but you have no intention to pay, instead you plan to refinance to extend the maturity, go beyond 1 year, then that liability is not a short-term liability. Okay, I understand this concept because it might show up in the multiple choice question. Okay. All right. So here you don't need to know the types of a bond and what do you need to know? First thing, 100%, if I give you a bond, you need to be able to calculate what is the present value of that bond. Okay, do it a couple of times. I know you did it in class using Excel. Try to do it using the table. You need to be able to do it, or using a financial calculator if you are confident you're not going to make mistakes. Okay, so either way, 100% going to be tested. You need to know the present value of the bond. All right. Second, understand what is the stated rate, what is the market rate. So if you look at question number 1, this will be a very typical question I'm going to test in the test. Okay, it's not going to be exactly the same question, but I can have a similar question just like that. And I will not tell you what is the interest payment. So here I did tell you, but if I don't tell you, you should be able to calculate what is your cash interest. Okay, and pay attention. Is this interest paid twice per year or once per year? And also, if a payment is in December 31st, then you should, when you receive cash interest, then that will be debit cash interest. But if a payment is on January 1st, then your journal entry should be interest receivable. Okay, receivable. All right. So definitely review question number 1, review question number 2, and review question number 3. Actually, just cross out question number 3. We're not going to do question number 3. So question number 1, question number 2, no question number 3, but question number 4, absolutely yes. Okay, so question number 1, number 2, number 4. We're not going to talk about the fair value option. So question number 5 is off. Okay. And question number 6 is off. You don't need to study that. And here I will not test the notes payable because they're very similar to bonds payable. Okay, so here you don't need to spend actual time on it. The journal entry will be identical, except the account name is different. Okay, all right, and okay. So that's one thing is about this non-cash transactions. So non-cash transaction, when you don't have a cash involved, there will always have a mechanism. You have to decide what is the transaction value for this transaction. And just remember, when you have two sets of transactions, you should use the side which are most objectively decided. So let's say if you have a bond, you know exactly what's the market value of the bond, then that will be your valuation base. Or you have a bond, but you don't know the market value, but you know on the other side, you have a very objective number for the price, and then you use the other side as a valuation base. So basically, when there's no cash transactions, you have to pick a transaction base which are more objectively decided. Okay. That's it. For this chapter, the most difficult part is actually limited to two topics. The first is discount premium amortization. Definitely spend some time, make sure. Especially if you don't feel comfortable about the premium, I will pick a question with the premium. So question number 1 is awesome for you to just review it. Second place, a lot of people feel difficult is retirement of the bond. When you retire the bond, you have to realize gains and losses and how to do it. Okay. Any questions about this chapter? All right, so let's move to the next chapter. Just give me a minute. Share it again. Okay, so next chapter, stockholders' equity. Again, like what I said, this is a chapter you will see a lot of concept related to journal entry come from. Okay, so first example, the basic forms of organization. So there's 3 types, and also especially know why the company want. What's the advantage of having a corporation versus having a partnership, right? If you have a corporation, you have limited liability, and you can raise capital very easily, but you also have a double taxation. Okay. Just read this, understand the basic difference. Here, let's take a look at the questions. We talk about how to calculate the preferred stock dividends, especially when the dividends is cumulative. Make sure you know how to do this question. Okay, so this highlighted question about the preferred stock dividends. Review it. And next, I'm gonna skip this. The journal entries. Here it has a par value, has stock, common stocks. It actually most likely going to be tested in terms of this lump sum sales. So exercise 2, spend time, do it again. Okay. I made a mini video about this. So if you don't know how to do it, just watch the video on Canvas. And again, non-cash transactions, I can just be a multiple choice question. Say, if you have this transaction, what is the value you use for your journal entry? It's a very short exercise, but help you understand what is objective price. Cost of issuing stocks, basically fairly simple. Go over this question. So again, remember, you can write it down the things you feel you need help, and just write it down so you can look up if you forgot how to do it. All right. Section number 4, treasury stocks. Very, very, very important. 100% going to be tested. Okay. So in this class, we talk about the 2 reduce shares outstanding. You can do 2 things, right? You can retire the stock or you can buy it back. We call it a treasury stock. For the test, we will only test the treasury stock. We're not going to test the retired stock. Okay. Here, just go over this question, make sure you understand when you sell treasury stock at a different price, what it's gonna be. So, okay, so exercise 4, exercise 5, exercise 6, know how to do it. We're not going to do exercise 7, so cross out exercise 7. Okay. Section 5, we don't have any test about the return earnings, so you don't need to worry about the return earnings. Cash dividends is going to be a very simple question about a cash dividend. So know there's 3 dates, but only 2 dates need the journal entries. Okay, so exercise 8, exercise 9, put a little star on it. So again, this is about a preferred stock dividends. There will be at least one question about this topic. Make sure you know how to do it. Okay. Property dividends, again, one tiny multiple choice question will be related to this question. So make sure you know how to do it. Okay, so the only difference between cash dividends and property dividends is property dividends, you have to market to market before you do any journal entry, okay? Because any property you have, they sit on your balance sheet based on historical cost. So at the time when you're going to pay it out, you have to recognize that the fair market value, recognize gains and losses, then do the normal journal entry related to dividends, okay? Here, just make sure you go over these 2 questions. And liquidation dividends, we're not going to touch that, so cross it out. And the stock dividends, stock split, you can cross out all of them, okay? Of course, nothing about the reverse stock, fractional shares, they're all gone. Any questions about this chapter? No? Everyone is perfect fine? Okay, so I'm gonna move to the next chapter. Okay. Diluted securities and earnings per share. This is the chapter you will see most of the calculation come from. Okay. It's difficult if you're gonna spend well, I wouldn't say only spend this chapter. In general, it is a difficult class. And it's going to be a difficult test because this is a test really test, do you know or you don't know? Okay. So unless I tell you like you will see some multiple like concept questions, for example, from the equity chapter, most of the question will be calculation related. Sometimes you may calculate a lot, sometimes you calculate a little bit, but I just want to show me like you actually can do some calculation. And this chapter is the most calculation intensive chapter. Okay. First, dilutive securities, convertible stocks, a convertible bond. The emphasis is more like for the journal entry when you convert, right? So if you're gonna convert, what is the key information you have to know is the book based. Okay, therefore, when you do conversion, you do not market to market, and you look at whatever you have on your book. That will be your journal entry valuation base. Okay, you will see sometimes that you may see some information there, but that can be unrelated information, just be there to confuse you. Like say, for example, this exercise 2, we have this market price of the stocks, and you don't need to use it. Okay. So again, you know, in class it seems very simple, but during the exam you get kind of panic and you may make mistakes. So you wanted to write it down when you're taking notes instead of it's going to be book value approach. Okay, and the convertible bond, the convertible preferred stocks, I will only test 1 out of 2. Okay, so not both. Warrants. Again, you can see here, you're going to use a proportional method or incremental method. So I may combine this one to do with the question we had before. But if you have time, definitely go over this example. All right. So next topic, share-based compensation. We are not going to test the restricted stocks. We're not going to test the stock purchase plan, and you don't need to know how to disclose it. The only thing you need to know about this is options. Okay, so here, skip this exercise 1, skip exercise 2, and you want to really focus on exercise 3. Okay, exercise 3. So go over this question, understand this example. Okay, I may just using the similar example, but I will change the data a little bit or change the vesting period a little bit. So you for this test, you will see like, oh yeah, I think I know this question, but they're not exactly the same. So again, I wanted to emphasize that is do not write down the answer to the question because they're not going to be exactly the same, even they look similar. Okay. Yeah, so spend time exercise 3 and this multiple choice question, know how to do it. Now, earnings per share. First, for this topic, there are 2 things I'm testing. The first is the denominator, right? How to calculate weighted average. We did a couple of times, but just understand, there are a lot of things can happen. You can buy back stock, you can issue stocks, and you have stock split, how to counter that. And second, earnings per share. Earnings per share on the numerator, most I'm testing like as if converted. Okay, definitely go over this example, the frank incorporations and the 2 multiple choice question. Exercise 6, I made a mini video for it. Do it by yourself and then go over this. My best recommendation on how to study this test is in the past, we have students, they study in groups or they study at home, but they, they meet over Zoom. What they do is they actually just download this blank study notes and do it again without looking at the notes you take in the class. That is actually a very effective way because when you start to do it yourself, and then you will realize right away what you know, what you don't know. Okay, the worst way to study, I can tell you this, is you have the answer next to you, you look at the question, you look at answer, you feel, oh, I understand everything. Trust me, you don't. Okay, you have to do it, and then you will know it right away. Okay, but I did have a mini video on this exercise 6 and also all the way to exercise 10. Watch it if you don't know how to do it. Okay. But these are all super important exercises to watch. Exercise 6, exercise 7, exercise 8, exercise 9. 100% going to be tested. Okay, so here, preferred stocks, common stocks, and options. This is a difficult chapter. Make sure you spend some time on it, especially what happened when the options or the preferred stocks they issue in the middle of the year. Okay, so if they issued the year before, we always assume the conversion happened from January 1st. If they issue in the middle of the year, always start from the issuing date. And again, we also use the book value approach. So when you convert, we're based on what you have on the book. Okay. All right. Any questions about this chapter? All right. Then the last one. Oh no, we did this. Okay. The last one is the chapter we just talked about. So this is the chapters about the securities, and we only cover bond and the stocks. Okay. Here, there will be one multiple choice question about the concept, like say, what is held to maturity, trading, available for sale. Just read through it, understand the difference. And again, I will ask you to do the journal entries, but for this chapter, I will give you the amortization table. Okay, so you don't need to do amortization table by yourself, but if I give you amortization table like this, you need to be able to get the numbers and write out the journal entry. Okay. Here, in this chapter, I only test the fairly basic, right? So here, the basic journal interest payment, how to do it. And I'm not gonna test you on this question. So here, if you sell in the middle of the year, I will not test this question. So you can just cross it out, okay? Available for sale. Again, the key is to make sure you get the right account, right? If you're taking notes, I would like you to just highlight this, and therefore, yeah, I'm looking for what after the dash or what are within the parentheses. Here, I mean, I can give you some leeway if you just write like a fair value adjustment without things in the parentheses, but unrealized gains and losses, it absolutely need to have something after the dash. All right. Another thing is important is during the exam, I know you are short for time. You can just write like a FVA, perfect fine, or unrealized G and L. It's fine. As long as I can tell, then that's okay. But you cannot write as a bond investment as a bond again. Okay, so same thing here. Stock investment, you cannot write as a stock. All right. So here, again, just go over these questions, the basic journal entries. What I'm looking for is actually how to do the fair value adjustment. There are a couple of examples we did in class. Make sure you go over this. And we're not going to test if you sell before the maturity date. So here, cross out anything sell before the maturity date. I will not test in this chapter. Okay. This Web Corporation, yes, go over these examples. Understand this. I may have a question. Look at this balance sheet. I can ask you, say, how this gonna impact the balance sheet, how to impact the income statement. If I give you the amortization table, you need to be able to tell. Okay. So similarly with income, if you classify the income is very similar too. The only difference is the journal entry. Make sure to use the right account. Okay. So for this BE 17.4, actually I would like you to cross out. It's not because we're not gonna test this, but this is just too simple. I don't want to give you an illusion like that's what we're gonna test. Okay, so just cross it out. But what we might test is the next example, like this Rogers Corporation. This is a decent difficulty. So if you want to look how difficult it is going to be, I would say this Rogers Corporation is a good measurement how difficult this chapter going to be tested. Okay. Equity investment. Here, less than 20%. There will be one question on how to do the journal entry for equity investment. Okay, if less than 20%, and then this is 17.6. This is a good example. Go over that. One simple question about the 20% to 50%, most likely is going to be either a multiple choice question or very short essay question. Okay, as long as you know how to do this journal entry, that's fine. It's fairly simple. If you really cannot remember, at least write it down, put down your notes. Okay. That's it. We're not gonna test fair value options. So cross out fair value options, not going to be tested. Control interest not going to be tested. So here you basically can stop at this page 16. So we don't test anything beyond that. Okay. However, we did a couple example in class. I will recommend you, if you have time, go over this. So the exercise 17.3, 17.4 on the page 19. And we also did this one, 17.9. Make sure you know how to do it. We are not gonna test the comprehensive income. Okay, so anything to do with comprehensive income, I will not test it, and you don't need to know for the test. Good? Any questions? All right. If you have no question, let's just take a look at the example or the review notes. We have 20 minutes. We have 40 minutes. Do we have 40 minutes? Yeah, so we have something around 40 minutes. So we're trying to go over some of the questions, not going to be able to go over all the questions, but let's just try, okay? I'll give you 1 or 2 minutes to have it downloaded. So do you have it downloaded? You can give me like a thumbs up. Oh. Just give me 1 minute. Actually, I have to need to put it up first. Paste. Review notes. All right. Okay. All right, so this is what you have, yes? No? Is that what you have, or did I, because I have like a couple of versions, so I want to make sure.
I think I had the old one. Now I'm downloading the newer one.
Yeah, so the older one is very similar to the new one, except there's slightly more questions. Right. So everyone has the newer version downloaded, yes? All right. So the difference between old one and new one is I would like to give a couple of examples on the multiple choice questions. Okay. So first, these are just the examples. And for example, the question number 1 is going to tell you how we're going to test the question, which requires some of the calculations. Okay. So let's just do this together. Okay. This is a question test on treasury stocks and equity So the answer for this question is a C. Okay, it's a C. But let's see how we're gonna do a question like this. This is a question about stockholders' equity. Like when you do multiple choice questions, there's a 2 approach, right? The first, you can eliminate the one which are wrong. And second, or you just directly walk through this. But for this question, clearly, you cannot eliminate the wrong ones because you don't know which one is wrong. And so let's just trying to do the calculation by ourselves. But when you do calculation, the first thing actually is the most important is to understand what the question is. So the question they want to know is this: what is going to be this additional paid-in capital account at the end of the year, right? And we understand that this additional paid-in capital account is on the balance sheet. If you want to know the ending balance, you always need to know the beginning balance. So here, let's take a look at the beginning balance. Beginning balance for paid-in capital, we have like 700,000 to start with, right? And then let's take a look at what happened. First, you bought 2,500 shares of its stocks for 75,000, right? And for this transaction, what it impacted the additional paid in? Yes, no? I would say no, because if you think about the journal entry, right, you buy treasury stocks, so you debit treasury stocks, you credit cash, and I don't see paid in capital in that journal entry. But in this transaction, we know one thing is we know how much you pay per share, and you paid and $30 per share. Just do this quick calculation, right? And next, you sold 2,000 treasury stocks at 35 per share. So if you sold 35 per share, you bought a 30 share, and you actually kind of make $5 per share. And when you're making money, sell treasury stocks, and this surplus portion, it actually goes to your paid-in capital, right? So we're just going to add 35 minus 30 and multiply by 2,000. So far so good? If you feel it's a little bit fuzzy, just think about what the journal entry looks like. So Lex, you sold the rest of the treasury stocks at $20 per share, and you bought at 30, you sold at 20. Therefore, for each share, you lost $10, and therefore it has to be taken out from your treasury paid-in capital account. So here, let's see how many shares you have left. You have 500, actually 500 share left, but you lost. And if you just do this calculation, it gives you 705, 705. Any questions? Does that make sense? Right. You know, you can either just unmute or just give me a thumbs up. So therefore I know like, are you with me or you're not with me? Okay. The first question, you will see a question like this, you know, we may have journal entries in the study notes, but in terms of multiple choice, it can just ask you for a number. You don't need to actually redo the journal entries, but you have to go from the journal entries, think about the impact on the financial statement. So this actually go be like one step higher. So question number 2, this is a very typical concept question, right? So what dividends do not reduce stockholders' equity? Here, cash dividends, property dividends, and liquidity dividends. And here, when we do this, this is use a second approach, eliminations. And just think about when you do cash dividends, right? You take out retained earnings, so you certainly reduce equity. And the property dividends, again, taken out from retained earnings. Liquidity dividends also take out from retained earnings. So the only thing doesn't take out from retained earnings, but it's actually stock dividends, they take out from retained earnings, but they also add back to the stocks. Therefore, the total amount is the same. Okay. So in this case, the answer is B, because for stock dividends, it's just a reclassification. Okay. Question number 3. Again, this is a multiple choice question. And when you declare an issue of stock dividends larger than 25%, oh, what's going to happen? So this is a test on equity method. And for this question, you have to really thinking about what is the impact. What is the impact when you issue? Oh, actually, let me cross out this question. I realize I'm not going to test this stock dividend. So just delete this question. That question is not going to be tested. Okay. All right. So this is just the multiple choice question. How it's going to be tested. You will have this calculation, and then you will have this concept questions. Concept questions. So next type of question is the essay questions. It's just going to be like this. If you have a premium, what's the journal entry? And what if you're going to the first or second amortization, how to do the journal entry? I will never ask you to do journal entry go beyond 2 years. Therefore, you only need to know the first year. Here, when you do the first year, a lot of times you even don't need to know the amortization table because it is fairly simple if you just for the first year, right? So here I'm just gonna do it together with you, and you will see why it's fairly simple. For this company, they issue $100,000 8% bond and due on January 1st, 2017, with interest payable twice per year. Effective rate is 6%. So they know they want to ask what's the journal entry from January 1st, 2012. Okay. So there are a couple of things I'm testing. The first one is you have to figure out how to do the present value of the bond, present value bond. And that is where you're going to use your table or the time value or financial calculator. And if you do the calculation, it should give you a present value of 530. Okay, that's step number one. Do the calculation. After you figure out what the present value is and do the journal entry. Here, sometimes students make mistakes. Is they couldn't tell is this a liability or is this investment. So here, if you are issuing the bond, means you are borrowing money. If you are buying a bond, then you are investing money. Okay, so every time when you see issue, you know it's a liability. Okay. So here, if it's a liability, then you will receive money today. You're gonna pay it off in the future. Okay, so here you're just gonna receive cash, 108, 530. No. Sometimes it's just kind of like a really tiny minor things. But during the exam, you will really see it. It's just have to clarify the concept. So we're gonna debit the cash because you receive money today. And next one is this bonds payable account. It's a liability. So here it's always equal to the face value. Again, if you're taking notes, okay. For the bonds payable account, no matter what happened, always face value. This is really different from investment. For the investment, you just record your present value as a bond investment. But for liability, always use the face value for the payable. Okay, so here the difference it goes to a premium on bonds payable. On bonds payable. So here. $8,530, right? How do you know it's a premium? As long as you get more cash than your face value, it's a premium. Oh, another thing you can think about it, if it's on the same direction as your liability, is a premium. And if the opposite side is a discount, right? Discount means less. So far so good? Right. So it's a good practice doing example, especially like when you have multiple journal entries for the test. I would recommend you to write out the date for the journal entry when you're doing your exam. Okay, right. So that's the first question. The second question, they said, what is the journal entry to record the first payment and amortization of the premium? Okay, so here again, July 1st, 2012. Here you do not really need to have a amortization table. It's only doing it for 1 year. You can just see how we're gonna do it, right? First, the payment, right? You know you're gonna receive, you're going to have this cash paid out to pay for your cash interest. And how much is your cash interest? So that's a question. You will not have the present value tables available, but you can print it out and bring it to class. Okay, any other questions? Right, okay, so next one, cash. We figure out what is the cash interest. Here, you don't need to calculate it by yourself. You don't need to have amortization table. We can just do this. That's your face value multiplied by 8%. And divided by 2. So because it's twice per year. And therefore you can just do a quick calculation. You know your cash interest is 4,000. Okay, these are very important because I know in the notes sometimes they are going to give you. If I don't give you in the test, you should be able to calculate it by yourself. Okay, so that's your cash interest and cash payment. And now what you do is you need to do this amortization. How we're going to do it? We can first calculate what is the interest expense. Interest expense. What is the interest expense? It's just how much money you borrowed, which is the beginning balance. That's how much you borrow, multiplied by the market rate, 6%, and divided by 2. Just for half year. And just do a quick calculation that give you 3256. 3256. You can see here, if you understand what it is, you don't actually need to have amortization table. And now you have a difference. The difference is just goes to the premium. Okay, so just take this. And that will be 7/4. Okay, good. A question like this, 100% going to be tested, okay? And I will not go beyond 1 year. Therefore, if you want to use amortization table, fine. If you don't want to do it, it's okay. But 100% going to be tested, okay? It can be a premium or discount. Any questions? So the next question is about this incremental method and the proportional method. Actually, I made a mini video about this on Canvas, so I'm not gonna cover here. Okay, but it is fairly simple. I'm going to talk about another more difficult question. Let's talk about. Yeah. All right, so let's talk about question number 3. Question number 3. Okay. This is about the preferred stocks and the dividends. Right. Here, let's take a look at A. So if the preferred stock is accumulated, the company has 10,000 shares of $100 par value, 6% preferred stocks, 5,000 shares of $10 par value common stocks. And there are a couple of questions they want to ask you how to report the dividends, how much is the dividends, okay? So let's take a look at the first question. If the preferred stocks dividends is cumulative, the dividends was paid, last paid on the preferred stocks on 2009. And what are the dividends in arrears, which means should be reported, or should be reported even they didn't pay. Okay, so here, one of the questions, how do you calculate the preferred stocks dividends, right? You take the total amount, which is the face value, 10,000 shares multiplied by $10 par value. Okay, let me write down here. 10,000 shares multiplied by $100 par value and multiplied by 6%. Okay, so here each year, 60,000. And now you have to think about for how many years you have, and 3 years, and 2012 minus 2009. So from 2009 to 2012, 3 years passed, and for each year, you need to have 60,000. So the total is going to be 180,000. 180,000. Okay. So here, how you going to be reported? It's not a liability, but you do have to write in the notes that we own preferred stock shareholder 180,000. Okay. So the second question. So for the second question, if the preferred stocks is converted into 7 shares of $10 par value common stocks and 3,000 shares it's convertible and 3,000 shares are converted. What is the journal entry? What is the journal entry? So here, think about what you receive, what you give up, and you give up preferred stocks and you receive common stocks, right? So here, what are we gonna do? Just think about how many shares preferred stocks you give up. You're going to say preferred stocks, debit, because you give up. I'm sorry. Which is 3,000 multiplied by par value 100. That's your par value. So that gives you 300. You have to remove that from your book. So in return, you have common stocks issued. And you issue, so the preferred stocks, they issue, let's say, you also 3,000. And yeah. Each can be converted into 7 shares and $10 par value common stocks. So that gives you 210,000. Okay, so how do I know should it be 210,000? Just remember, if you have a par value, doesn't matter, your preferred stocks, common stocks, they should always be your par value. Anything go beyond the par value should be captured by the paid-in capital account. Okay, if you don't have a par value, then you can just use the paid-in capital account directly. You can just use the common stocks account directly. Do not use the paid-in capital account. Paid-in capital in excess of par common stocks. Okay, so here I wanted to talk about another, just a minor issue. If you have both preferred stocks and common stocks, and when you use paid-in capital, please use a dash so you know what this is paid-in capital for. If you only have one, then you don't need to. For the journal entry. All right. So that's B. That's B. And you can see here why we only have one account for preferred stocks, because they issue at a par. When they issue at a par, which means there's no paid-in capital account. Okay. So again, sometimes you understand when we talk about what does mean by issue at a par. If a common stock or preferred stock issue at a par, there's no paid-in capital account. And if the bond will issue at the par, then which means there's no premium or discount. Okay. All right. So the last one, it's a similar question, but a slightly different. is now what happened if a preferred stocks land not issued at par. If that is the case, what are you going to do? It's going to be the similar journal entry, except we're going to capture this difference when they're not issued at the par. Okay. So here, if they're not issued at par, I'm just going to copy paste this. I'm going to add one more account. It's called paid in capital in excess of preferred stocks. Preferred stocks. And if they're not issued at par, that would be 308. So here should be 3,000 multiplied by 7, which gives you 21. And here it's going to be 1. That's what it's going to be debit. So you have a 2 debit and a 2 credit. Any questions? If no question, let's just do one more. Okay, one more. So this is a very basic preferred stock, common stock dividends question. The takeaway for this is 2 things. A lot of people tend to get it wrong. Is first, how do you calculate the preferred stock dividend? It's based on the par value, not market value or not the issuance price. Okay, par value. And second, for preferred stock, common stocks, if you have a par value or stated value, then preferred stock, common stocks must use the par value or stated value. Any surplus goes into the paid in. And if you have both preferred stock, common stocks, please indicate what paid in for. Okay. All right, let's take a look at question number 4. Question number 4. Just calculate the basic and diluted earnings per share for each company. When you calculate the earnings per share, even I do not ask you the basic, you should always start with the basic earnings per share before you calculate the diluted earnings per share. Okay, so let's take a look at this question. This question they have an income of 300,000 and 100,000 shares of common stocks outstanding, and has a $800,000 bond. So 800,000 is the face value, 10% is the interest, and this bond is issued at par, even they didn't say it, and which can be converted into 16,000 shares of common stocks. Tax rate is 40%. Okay, how to do a question like this? There are 2 things, right? First is the numerator, the second is the denominator. And we are going to first take a look at the numerator first. Okay, so you're gonna first let's calculate the basic. Basic should be 300,000. That's your net income. And if you don't have any adjustment, so the basic earnings per share is just going to be $3 per share. Okay, why do you want to start with the basic? First, it's easier to convert, and second, also remember you should only calculate diluted. If it's whatever you calculate is higher than earnings per basic, then you should not report it. Okay, so the next one is called diluted earnings per share. And what do we do? First, make an adjustment to the numerator, right? When you have this bond converted, what's gonna happen is you're going to save interest, right? So here, let's calculate what is the interest. multiplied by 10%. But you're not going to save all of it because you can only save the portion which is after tax. And the after tax is 1 minus 40%. Okay, so every time we have a bond, convertibles, and make adjustment like this. So that is the numerator. And for the denominator, what you do is just to increase the shares, So you start with 100,000 shares. And you plus, here, you are going to increase the shares outstanding by 16,000. Okay, so that's going to gives you around diluted exactly another $3 per share. Okay, so you can see here in this case, it really doesn't matter you report or not report, they're exactly the same. Should it be, oh, did I? No, you're right, it should be added. You're right. Okay. That's a very good comment. So I should add, but the result is going to be the same. Any questions? So you should actually add the interest because you don't need to pay it anymore. Good? All right, so I'm gonna stop this for today. The reason is because I made a video for this one on Canvas, and I also made a video for this proportional method on Canvas. I will recommend you to watch it. Just give me 1 minute. Let's go back to Canvas one more time, okay. Okay. Okay, so there are a couple of questions, super important. You have to, even like I don't have time to go over this, but absolutely go to watch it. Okay, so again, number 4, number 5, watch these 2 videos. Okay, there will be very similar question like this, and also diluted earnings per share. Watch this, and the last one, you can watch this, or you can just go over the example we did in class last time. So even I didn't cover this today, but it's going to be tested. Okay. Any questions? No. Then that's all for today. Okay, so good luck. Again, for multiple choice for actual credit, there will be 1 question for accounting cycle. So please write it down if you want to get a 5 points for the actual credit. Okay, I need to know the basic steps in the accounting cycle in the correct order. Okay. All right, then that's all. Any questions? No. Okay, I will have this posted. And we'll see you next Tuesday.
Thank you.
Bye-bye.